Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and lots of news flow. So let's take stock of all of that. Firstly, in key news, Kremlin has said nothing promising after the latest round of Russia-Ukraine talks. I think these ebbs and flows will continue. So be careful if you're trading on one side or the other. What I'm trying to say is, after the positive will build up, this one statement shouldn't make you feel, oh, everything is turned negative. I know you know this, but I'm just kind of reiterating. Russia has redeployed troops in push to take Donbas, and while Russia said that they will not do any action around Kiev, uh, Bloomberg is filled with reports of how there were some explosions seen. So keep that at the back of your mind. China's PBOC is vowed to boost confidence and support economy, which should be construed well for metal names and some of the others out there. And therefore, if commodities do well, largely it should be considered positive for commodity names back home too. In terms of oil and gas, oil is retreated despite spiking yesterday, by the way, as the US weighs reserves released to combat inflation. So that is part one. And OPEC Plus is expected to rebuff calls to replace lost Russian oil. So which way does this eventually move on? Who knows? But one can safely say, right, with due respect to everybody, even people that we had got, and everybody was saying that at 140 that oil will move on to 180, 185, maybe 200. I mean, is that happening? No, at every rise, it is being met with equal supply as well in some fashion. And therefore, that is something that all of us need to keep in mind. Um, Nevertheless, what about equity markets? While they were quiet yesterday in the US, so the US markets had a bit of a dull day, even though the futures are marginally in the green, by the way. But yep, the US markets didn't have the best of outings. NASDAQ in particular cracked about 1.2%. But remember, it's had such a merry run that a little bit of a fall is perfectly fine. So that is part one. But select other pockets are doing okay. Remember, we've been talking about how the Indian mutual fund investors would have pumped in a lot of money in the month of March. We're not alone. Um, ETFs in Hong Kong have had a phenomenal set of inflows, and one would reckon that retail, in some fashion, through ETFs or otherwise, have really put in some money. So keep that at the back of your mind. So that is one. Asia looks slightly mixed, if you will. So multiple places across Asia are looking fairly mixed. And the SGX Nifty looked slightly higher. The last time that I checked, the SGX Nifty had a bit of a green to itself. The question is, can that continue, or will it be met with some resistance and selling pressure, because we are trading in or around that zone, which is looking slightly expensive. So what's the trade setup? The trade setup is that index is trading in a technical resistance zone or close to a technical resistance zone of around 17,600 to 17,700. That's the zone that most notes that I read said that we will meet with some bit of resistance. So let's wait and watch if indeed we do. First, if indeed we move up to those levels, and then if we find some bit of resistance around that. VIX is at the lowest level since the Russian war, and therefore that should be construed as a positive. Telecom and wealth stocks, as well as defense stocks, I presume will remain in focus today. And for tomorrow's session, viewers, keep in mind, there is some talk of how the APM gas price revision will happen today. And if indeed that were to happen, it will impact some of the specific stocks on Friday. And of course, remember that auto sales numbers will be coming out later tomorrow, tomorrow sometime. And on the trade setup tomorrow, we'll of course bring up the expectations as well. But this will remain a key point to ponder too. In terms of fund flows, foreign investors bought about 1357 crores, and DIs bought about 1216 crores. Remember, yesterday was a 35 crore number. Today is a 1357 crore number. So bit of buying, if you will, coming in from their FI desks. Not that it means anything, but yeah, they've bought a little, which is good news. So therefore, remain bottom up. Some stocks that you should keep an eye out for in the session today, which might be in focus because of news flow surrounding them. So one of them is Axis Bank. So Axis Bank will acquire Citibank's India consumer business from Citibank and the NBFC consumer business from Citicorp Finance for about 12,325 crores. And the other point being that then the NBFC consumer business from Citicorp Finance, like I said, Jeffries is saying that they believe this deal is a positive. So they have a buy rating with a target price of 1,040. They're saying that the Citi deal lifts the credit card base by 31% and wealth AUM by 42%. Cost plus investment implies that the deal is done at 21 times P on a normalized FY20 profit. Now, is that expensive? Is that cheap? Anybody's guess. Some people say it's expensive. Some people say that with the clawbacks in place, it's not that expensive a deal. It will consume about 250 basis points in capital, but will be earnings accretive in calendar year 24. The valuation gap with ICICI at 27% will bridge because of the ROA convergence. This might be ROA accretive, and at some point of time in the next couple of years, Axis will likely close the valuation gap, is what Jeffrey seems to believe. So do watch out for Axis Bank. Remember, was active in trade yesterday. Uh, so be mindful of that. And I think the street had some whiff of this. So I don't I mean, there may not be necessarily a trade on the back of this, but if you believe, if you have studied the deal well, and if you believe there is value here, please go out. I'm just saying that if you are trading purely on the punt of news, then some of this would already have been discounted. So that's part one. Hindalco is the other one. They released an investor presentation yesterday. They've said that they will spend as much as $7.2 billion to expand the aluminum business over the next 5 years across global and local. So about 2.4 billion for the Indian aluminum operation during the 5 years, and the remainder for Novelis. It shows the confidence of the promoter in the cycle. The key is, though, for the very near term, one, Hindalco has rallied quite a bit, and two, in the investor presentation, they have said that Novelis will face some headwinds in the Q4 numbers, and therefore, for the near term, you might actually see Hindalco, despite this confidence in capex, you might actually see Hindalco correct a bit. Please be mindful of that. Again, I do believe that some of these commodity stocks will only move on the back of what the underlying commodity movement is likely to be. So opposing forces at play, if indeed there's some bit of a truce, then some of these commodity price pressures might come down and all these stocks might correct. On the conversely, if China opens up, demand opens up, and the commodities move up, then the stocks might do well too. So lots happening between Hindalco, Nalco, Tata Steel, and some of the others. Be careful if you're trading these stocks, really. What seems to be on a really good trend is defense, and I mentioned the trade setup as well, that defense stocks might likely be positive. My active, because I heard from a lot of people about what defense might do. Now, HAL is a specific stock as well, because cabinet has cleared acquisition of 15 indigenous light combat helicopters for about 3,900 crores odd. It's a large order, and HAL has been continuously getting some of these orders. This indigenization of defense is a big theme across the world. It's happening in India too, and you might see more and more orders coming the way of some of the quality defense companies. It's something you got to keep an eye out for, viewers. Um, I don't know which way the cookie will crumble, but it might well happen that 3 years out, we see the Indian defense sector being a completely different kettle of fish than what it has been traditionally in the last 15, 20 years. Remember, I mean, any mystery novel you read would tell you how strong and powerful and entrenched were US defense companies, right? They were exporters to the world, of course. I'm not saying India will necessarily become that, but who knows? Why can't they? If they make large defense manufacturing for India, then they'll get expertise out there, and globally companies might be tempted to buy some of the Indian defense products as well. I would urge you not to scoff at this thought. A lot of very smart people that I talk to are actually talking about this. Worth pondering over. Godrej Properties, they'll develop a 9-acre project in Pune with approximately 1.7 million square feet of sellable area, estimated revenue for about 1,400 crores. I think this is the third project that they've signed in this month alone. Pretty strong going in terms of property or project acquisition from Godrej Properties. Max Healthcare might be in focus. Kayak Investment will sell about $500 million worth of shares via block deal at about a 5% discount. The price band, up to 6% discount the band, but the offer might be about a 5% discount on the deal. So watch out for Max Healthcare. I will also watch out for IFL Wealth, by the way, because keep in mind, viewers, IFL Wealth, it's a peculiar deal. Bain will acquire 25% stake from Fairfax, but it's There won't be an open offer. Um, Fairfax will continue to hold about 9.6% stake. So there won't be an open offer. So keep that at the back of your mind. And and therefore you got to think of what is happening within the IFL group with what is the focus of the promoters going to be for the next few years. Could it be IFL Finance? Could it be the broking business per se? How could it all shape up? I think all of this requires some pondering over. Lastly, the TRAI subscription data for January. The total wireless subscribers overall, by the way, decreased for the second straight month in January. There's a net addition of 5.9 million users, active subscribers in January, compared to a net addition of 4.2 million active users. Bharti gained about 0.7 million subscribers. So that was a good thing. Overall subscribers, we lost about 0.3 million, and Reliance Jio lost about 9.3 million active subscribers across broadband, telecom, maybe what have you. But the active subscriber base, Geo actually reported a positive number, 4.2 million versus 1.3 million for Bharti, and loss for V. So mixed data, but if you look at the whole data, the industry overall lost some, but Bharti and Geo, respectively, in some, if you slice and dice the data, have had some positives out of this data. Overall, the numbers look weak simply because if you just look at and if you ponder over what the data is pointing towards, I think SIM card consolidation probably had a part to play out here as well. So, tariff hike implemented in November has probably led to some weak subscriber trends, which can be attributable to SIM consolidation. And data subscriber additions in ensuing months would be the key thing to monitor. So I think that is something that everybody got to keep a keen eye out for. I mean, we had some graphics for that, somehow I'm not able to get it. But yeah, that is essentially the key thing to focus on when it comes to the subscriber data and how to read this data. Yeah, the tariff hike implemented in November and weak subscriber trends are attributable to the SIM consolidation. But I do think that the data subscriber additions in the ensuing months will be the key to monitor. So keep that at the back of your mind. So net, not a bad day today. Maybe sideways, maybe marginally higher, but it's expiry. It's also the year end, and maybe some activity around mid and small cap shouldn't be ruled out. Uh, you know, NAV management, if you will. But defense, Telecom, of course, remains in focus. And keep in mind, viewers, if indeed the APM gas price revision is announced today, then tomorrow some of the city gas distribution companies and upstream companies could be in focus. And most surely, the auto companies will be in focus tomorrow because the monthly data will come out. And most people are saying that two-wheelers will be muted and commercial vehicles could be fairly active. In fact, CLA says a note on Ashok Leyland today with the buy that they've reduced the target price, but they still maintain the buy. So watch out for the CV players as well in this session tomorrow. Maybe some bit of repositioning happens. So all of those counters need to be kept in mind. Thanks so much for tuning in. Have a safe, profitable day ahead. Stepping out. And if you're in a crowded environment, try and stay masked up.